Welcome, guys. Okay, let's start and do a quick intro, name, company, a little bit about what you do.
Sure. Hi, I'm Amy Emmerich. I am the former CEO of Miss Universe, and today it's the first time I'm actually sitting under my LLC, Emmerich Industries. Emmerich was my college nickname, by the way. I built this brand for strategic advising, but my goal is to build the products, physical products that I myself have been inventing. And I finally put in my first patent today.
Hey everyone, my name is Scott Annan. I'm a co-founder and CEO of a company called MyCube Safe. We manufacture and design personal designer safes to secure everything from jewelry collections, important documents, medications, firearms. We've been doing it for about 14 years, and we are launching a new website and a new product line this week, and excited to be here.
Hi, everyone. My name is Farah Azmi. I'm the CEO of Rahua Beauty. Rahua Beauty is a 15-year-old hair care and body care brand with a mission to save the Amazon rainforest. I'm just the hired help. I'm not the founder, but I've worked at other companies where I've helped the founders scale from 0 to 1. And then this one, again, it's been 15 years old and it's helped scaling that one as well.
How's it going, everyone? My name is Nick Carlucci. I'm an M&A advisor at Flippa.com. We are a marketplace to buy and sell online businesses. Great to be here.
You can keep the mic, Nick. We'll start with you. So for founders that are preparing for a sale, what are the most important steps that they need to take before going to market to maximize valuation?
So when it comes to maximizing the valuation, if we inverted the question and thought from the perspective of a potential buyer, what they want to know is what you've been up to and what the results of those efforts have been. So documentation is going to be the one thing that you're going to want to keep in mind as you prepare your business to sell. So that's documentation around standard operating procedures. What's your team doing on a daily and weekly basis? What are the necessary tasks that the next owner would need to complete in order to sell and step in? And then in terms of the financials, a lot of the businesses that we work with are owner-operated businesses where a lot of it comes down to the trailing 12 months P&L. So always keeping one on hand. That's probably the biggest piece of documentation that you're going to need to get through the selling process. So at the end of the day, I think it comes down to documentation.
And Scott, from your experience in finance, what's the most overlooked metric that founders should monitor on a daily basis to really keep the business healthy?
Well, I think maybe it's obvious, but I think that you really do want to have a good handle on cash, right? Solvency is so important. It's the lifeblood. It's the oxygen of a business. And there's lots of ways of going about that. But I think really understanding how you're financing your business, whether that's through equity, through debt, through certain credit lines, through revenue, ideally. So I would say that's a big one. And then, there's a variety of other different KPIs and things, but I think it's really important to understand what your cost of acquisition is per customer. You can have great revenue, but if you're paying a lot for that customer and it's taking you, depending upon what the dynamics are, if it's taking you, 6 months to basically pay back that investment versus 3, it's really important to get a handle on that.
And Farah, has there been any financial strategies that have helped you grow efficiently in these highly competitive markets?
Yeah, I think kind of at the crux, it sounds like really basic advice, but I find that a lot of companies don't take the 50,000-foot view of their P&L. And so what I mean by that is I find it a little laughable and funny whenever I look at small companies trying to invest in top-of-the-line operations systems. Their ERP systems are great, their financial systems are great. When I'm thinking, if you're less than 100 million, why are you spending that much money on all these little things when you should be allocating more money into your marketing or other ways to actually drive growth? And that's a basic thing a lot of people try to do up front. But then once you take that 50,000-foot view, it's understanding each department, am I spending that money efficiently? So I work with my marketing leads, whenever I think about the marketing budget, how are we spending across brand, across influencer, PR, et cetera, making sure that's efficient, but also that we're not putting all of our eggs in one basket, right? Like, I don't buy by the strategy of like, let's invest everything into influencer and see if it works. Like, let's test slowly across all and then start to scale up. And that is a common theme for me, is like just constantly testing and then investing more as we prove results from it.
And Amy, what's one mistake that you've seen brands make when they're trying to diversify their income streams too quickly?
I've seen us make, and I've made myself. I would say that you think you can do anything, and you can do anything. You cannot do everything at the same time. And as people think, well, we need more monetization, we need more revenue lines, and you quickly build out 10 new ways that you can do that, and you find out very quickly that your cash will dissipate. So I always say, really figure out where you're going to play to win and which one of those revenue lines you want to bet on and go all in. You'll find out a quarter of the way in if you've got to switch it up, but attempting to do too many things at one time really gets you.
Have a bit more focus with the channels that you want to focus on. And Nick, from like a buyer's perspective, what are investors really looking for in e-com and SaaS businesses right now?
Yeah, I think they're obviously looking at, the numbers and the documentation that you put together so they can verify everything that we had just discussed. The main thing that I think, especially with those, I know there's some people here that are very active on social media. I think something, folks should be cognizant of is that you're building a business that can stand apart from your individual brand. One of the biggest challenges that we face is trying to sell a business that has great margins because they're 60-70% of their leads are coming from social media, but a new owner isn't going to be able to step in and replicate that. Meaning, in order to keep that lead flow, they'll need to invest in a lot of paid ads, influencer marketing, and that drastically hurts the margins and our chances of selling the business. So something to be mindful of as you're continuing to build the business is separating your individual brand from that of the business.
And how do you think that, like, Farah, sorry, how do you think about profitability versus like reinvestment as you are scaling?
Yeah, I think it depends on what stage, where you are as a company, if you have investors, if you don't. We're not investor backed, we're bootstrapped. So for me, it's all about growing sustainably and profitably. I have certain benchmarks and milestones that I have for my team, and for me personally, where I say, okay, once we reach X million in sales and this much in the bank, then that's when I feel comfortable hiring this many more people or investing this much more in whatever else. And so that's where it's just important just to take it step by step. And it all depends on where you are as a company, if you have investors or not.
Yeah, like creating those like trigger points for when you need new hires rather than just kind of listening to the team, like understanding the data around it. And Scott, when preparing a brand for like investment or sale, what are the top 3 financial red flags that you think buyers or investors are looking for?
The red flag. So, well, I think that again, one of the big ones is this your what they call CAC. Your cost of acquisition of customer. I think that's a really big one. I was in a situation where I was actually looking for an equity partner, and or someone had approached us and were talking with us, and so they basically said, "Well, revenues are good. We like the growth, but your CACs are too high." And so I think you just have to get a handle on that. And if you're a multi-product, as best as possible to understand the attribution of each product, right? So like we have a product that's with an AOV of $1,000, and we have a product that's with an AOV of 500. So I want to understand, not on a blended basis, but on each individual product line, what those cost of acquisitions are.
And Amy, just following on from that, like how do you know when it's time to bring in outside capital, and how do you protect the brand integrity when you do so?
When you can tell that the only reason why you're not growing or the only opportunity you have to grow is to create or the lack of that cash, you need to look for investors. And I think in that process, you better make sure that those investors understand your brand values and your core mission, because the expectation of giving you money and expecting you to change that just for revenue is an issue. Reach, relevance, revenues kind of have always been my trigger points. It's sometimes complicated to measure relevance, but you've got to find your own way for your brand. Maybe that's through earned media and earned press, but you can track without spending a fortune on testing your audience, but you can track relevancy. And that really is how you're going to balance out, right, what your revenue is and how you're growing. That's the reach, whatever your specific trigger point is. And I think once you know, the only way to grow is the actual cash flow and the resources that you need. That's when you bring somebody in.
Nick, what are the most common pitfalls that you're seeing first-time sellers face, like during negotiations, and how can they avoid that?
So outside of the documentation piece that I've touched on quite extensively, I think one of the biggest things, as a seller, you spend so much time building your business, putting together the requisite marketing materials to list it on a platform like Flippa. I think having the confidence to not negotiate against yourself is very important. So when we start having conversations with buyers, don't undercut yourself. If somebody doesn't have the time or isn't willing to put in the effort to put forward an LOI and take the 10 minutes to not only share the deal that they're putting forward, but how they would get it done, it isn't worth your time. And then the other big challenge that I find, especially sellers, maybe it's their first business that they're selling, is trying to hide weaknesses of the business. The most successful sellers that I've seen get the best deals are the ones that can reposition those perceived weaknesses into growth opportunities. Keep in mind what buyers want, this is an investment for them. So it will also help to narrow your search in exactly who you're looking for by being able to take an accurate look of your business, diagnose what some of those weaknesses are, and then reposition those and go to market with those as growth opportunities to help you find the buyer for your business.
And Scott, what should founders do or brand operators do when they don't have a financial background? What's your number one tip for building that confidence and making those data-driven decisions? Because you come from a finance background, don't you? So obviously it's always been at your...
Yeah, so I think that was an important aspect of me gaining investor confidence as I built MyCube and other things. But I think if you're a founder who doesn't have financial experience, you definitely want to find someone who can work their way around a P&L and a balance sheet and do some modeling for projections for the future and things like that. So there's a lot of consultants, there's people you can hire, bring in, but I think that the folks who get a handle early on their finances and understand, what their cash flow is, what the P&L is, what the profitability is, the earlier, really the better.
Mm-hmm. Farah, you've seen significant growth in search interest. How's that influencing your forecasting and budgets?
Yeah, I guess, so at Rahua recently, we were announced via Vogue Business that we were the most searched hair care brand in year over year, which is a wild stat that, for me, I didn't really know what was happening because you're not really trying to drive search volume per se. You're just trying to drive brand awareness. And when we figured that out, again, I kind of to my earlier point, I didn't funnel all my dollars into SEO or GEO. It was all about let's test and learn and see what's actually going to move this marker a little bit more. So right now we're just pushing the conversations in PR to make sure they touch on certain keywords that we want. Or we're hiring copywriters to build out certain elements on our website to fill up our website for GEO optimization a bit more. So things like that, once we learn a stat that we're succeeding on, we just try to invest in slowly to try to move the needle even further.
And Nick, last question for you. What's your top piece of advice that you've got for entrepreneurs who want to build with an eventual exit, and how can Flippa support them with that?
So I'm going to say it again. Obviously, the documentation is very important, but also, be your own consultant. I talk to a lot of folks that are maybe 6, 12 months away from actually selling their business. And what I've seen some really successful founders do, because I know, if you're running a D2C brand, a SaaS business, you're working, head, in the grindstone 60, 80 hours a week. And sometimes you're not able to see a lot of the glaring problems that are preventing you from hitting that next stage of growth. So what I've had some founders do in preparation for a sale is take 30 minutes on a Saturday morning or a Friday afternoon and step outside of your business, act as your own consultant, and from a high level, try to think about if you were a buyer, what are some of the challenges that would prevent you from moving forward? And that can unlock a new stage of growth. I think with Flippa, the reason why sellers typically turn to us is we've been in the space for 15 years and have over 1.5 million buyers globally. So because of that, when you're looking at selling your business, it's really important that you find somewhere that can get you the reach necessary to find that niche buyer that can actually move forward.
Yeah, because I bet it's a bit of like a needle in the haystack sometimes, especially if it's the first time you've done it and trying to find the right person that you've built something from the ground up. You don't want it to go to just anyone, do you?
No, not at all.
Well, thanks so much, guys. That was brilliant.